Let's get this on the road here.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Happy Monday. Welcome to Pre-Market Prep. I'm Spencer. There's Dennis. There's Joel. Hope you all had a great weekend and slept better than I did. For whatever reason, I could not sleep all weekend. But we got some things to discuss on our minds. Question number one, how do we feel going into the last quarter of the year? We got some people, some of us are bullish. Some of us are bearish. Some of us don't even know where we stand. So we'll talk about that on today's show. We'll talk Tesla, of course, that Q3 deliveries out over the weekend, and they beat the estimates on that. I want to talk about the oil spill off the coast of California. There is a company at the heart of that is publicly traded, so we'll get to that. Merck is still going this morning. I want to talk about Merck as well. We'll get to your questions from our chat. Tim Quast will be on the show at 8:35, as always, the founder of Market Structure Edge. And before I throw it to Joel, reminder that the next Pre-Market Prep Plus weekend extravaganza is not this coming weekend, but the weekend after. And if you're all like, wait, I didn't go to the last one, I don't know what to expect, well, just watch this.
Get ready, Pre-Market Prep Plus.
So here it is, trading from relationships.
Talk pairs trading, sympathy trading, risk arbitrage, and then we'll even talk to social media.
This is your chance.
Be there.
How to increase the odds.
We're going to dive deep into relationship-based trading, pairs trading, sympathy trading, basket trading, risk arbitrage.
Then get ready for the event on October 16th. You guys think we're fired up on the Pre-Market Prep Show? Then be there October 16th for Trading from Relationships 2.
Hey, if that didn't get you excited, then you don't have it.
And I just want to say we're calling it number 2, but you don't need the prerequisite. If you didn't sign up for number 1, you're going to be okay. It's going to start from, obviously, we're going to start, and you'll understand it all as well. So we're not just going to dive into content. It's not building from level 1. It's talking different stuff. So we're going to go into some detail. I'm going to talk about, a lot of market neutral trading, because in this environment, long only, and we're going to get into this discussion in a few minutes, has really suffered. If you're a long only trader, it's been a tough year. But if you're, and obviously, if you can be a stock picker, it's still been okay. And the market is still up. But I'd say in the last 6 months, if you're fading and you're going both ways and you're doing other things, some traders are having career years. I know Kenny Click's doing fantastic over there. I hit the bed. I'm doing pretty good too on my trading as well. I think it's my 4th best year ever it's setting up to be so far. So it's up there. It's been a really good year for traders. But as a swing trader or long-term investor, my long-term investing portfolio has gone nowhere in the last 6 months. It's just kind of sitting here and hanging out. And that's really because you look at the IWM overall and it's kind of gone nowhere. And I'm long only in my long-term stuff. But as a trader, you kind of go both ways. You talk different strategies, and that's what we're going to talk about on October 16th. Teach you different ways to look at the market.
All that being said, let's look at the market. We'll get Joel's charts up on the screen here. Joel, how are we doing this morning?
We're down 14.5 handles. Had a little follow-through rally overnight, 43.62. That's your pre-market high. That'll be a good number because that's 32 handles away. We got to 43.15, and folks, nothing there. Absolutely no reason for it to stop going there. Just a yo-yo market. Crude flat at 75.88. Gold down $5 at 17.50, 320. Silver, that's down 15 cents, 22.38. Bitcoin and Ethereum going opposite ways. Bitcoin down 610, trying to work its way up to the top of a trading range, perhaps. And Ethereum futures are up $15 at 3,337. So, boy, oh boy, we're doing some market talk, right, on the pre-market show, and we got some opinions, different opinions, and I won't say I'm bearish, but I'll say I'm nervous. I'm nervous about this market. And
why? Give us your thesis.
My thesis is pretty much technically based, and I don't like the way we ended the quarter. Right, we've had 6 up quarters in a row. We were up. We barely eked out the quarter. Numbers speaking. I mean, I could be convinced. We hold 43.50. I'll flip to the bull side. But the other thing is the overnight action, right? The whole time up in this market, the overnight action had been strong and stronger and holding the daily gains and adding on to them, maybe a little pullback. But now it just seems like there's just more red. Like we come in the morning and it's a fight. The market has to fight its way back up and then they knock it back down at night and then it fights its way back up. Whereas for the last 6 quarters, it was, finish strong, open strong, hang out, maybe improve on the highs. So that's what I'm looking at. Of course, we're coming into earnings season, right? Q3 earnings season, and you get a bunch of good reports. I think you're losing some leadership here. And I know you like to talk about a more diversified market, but Apple, I mean, that's pulled off. I'm just looking at the top components here. Apple, Microsoft, man, looks a little tired. Google looks a little tired.
Oh, I'm glad you brought that up. Can you look at Amazon?
Amazon looks a little tight.
Amazon,
Yeah.
I think this might be Amazon's worst year, maybe sans 2018.
Hasn't been great.
It's been Amazon's worst year in quite some time.
Yeah. I
So
mean, you're
that's it.
looking. This
Facebook
looks
too.
like a lot of charts this year where you had a little bit of you had the big run last year, and this has been a lot for a lot of stocks, a digestion year. Digesting huge gains from the previous year. I mean, Amazon had that huge run from 2,000 to 3,500. Maybe it was too much too fast. It was when zombie apocalypse was happening. We're never going to go into a store again. Well, that didn't happen. So, but Amazon has still continued to grow. Amazon continues to still do everything. It still remembers core. It still is a core position in my long-term portfolio. But there's so many charts, Spencer, that look just like that from this year. I mean, bring up the IWM, which encompasses every small cap stock, 2,000 of them there. So bring that up. And, you see a similar chart. I mean, the IWM and Amazon really have nothing to do with each other, but it's the same thing. Huge runs, 2020, back half, 2021, digestion. I mean, you could even argue Tesla similar, and it's a little more sloppy because he had a really big run in February, but you've been digesting here in Tesla for a little bit too. So, I mean, I don't know what to say. This is what the discussion we're having in the pre-market show is. Let's go back to the SPY. Is this market, is this the digestion period, and eventually we're going to start running here at the, in the last month or two of the year? Or is this the start of something, where people are just tired of owning stocks for a little bit?
Look at that monthly chart.
I don't know if anybody knows the answer.
I got the cash up there, because the S&P cash. I mean, is this? I mean, look at that. I mean, it's been basically straight up since the March low. You've had your dips and everything, and now you come down. I mean, 4,000, would it be the end of the world if we came down to 4,000 in the S&P and consolidated, or even worked our way into 3,900 or 3,500? Would that be the end of the world? No. I think that another good way to put it, I think that whatever upside here may be in the market, I think it's offset by the potential downside. And you're looking at
what are you doing? Are you still? But are you selling stocks? If you're nervous,
no,
are you selling stocks?
I never
or are you
sell.
still?
No.
You're just holding.
Yeah, I'm holding. I'm not buying
He's like
more.
Warren Buffett. He just holds through it all. But
Yeah,
are you buying?
I'm nervous. No, I'm not buying.
Not buying
I don't want to buy. I'm nervous. I've never been nervous. I mean, we had
we're always nervous.
But we had the no, we're not like pre-COVID, like January and February nervous, right?
Oh yeah,
but,
I was nervous then.
Yeah, I'm not like that. I don't know. I mean, the market continues to prove bears wrong, right? So why is this time going to be any different?
That's what I asked to you.
Why?
You asked it to yourself, which is great.
I mean, your thesis, Spencer, is you think, and you still have the bet with Joel, that we're going to be making new all-time highs by the end of the year.
Yes, one new.
I am so much on the fence. So go. Why?
The bet is at least one new all-time high by the end of the year, and it goes back to what Joel said. I don't know if you said it before or just now, but Joel was asking, like, what's the catalyst? Well, we don't need a catalyst. I hate the term like wall of worry. I think it's a stupid term. The market climbs a wall of worry, but like that's kind of what's happening. Like think of all the things to be afraid about. There is Evergrande, this, and supply chain that, and inflation this, and oil spills now. But in the grand scheme of things, none of it really matters to the market, to the stock market.
What does matter though? What's the main thing? What's been the driver of this rally for years?
And he's right.
Okay, rates, fine. But
and now and rates aren't going down.
Okay.
Right? And they may be going up. I mean, don't tell Paul that, but don't fight the Fed, right? That's what we've been saying for years. Don't fight the Fed.
Rates are going up. They're going up. They're going up like a quarter of a point.
What do you think this? Okay,
are they even going up though? We're ways from that. We haven't started tapering yet. I mean, we haven't even started tapering.
They're going to go up marginally, right?
Eventually, maybe a little bit.
They will.
A smidgen.
Yeah, a smidgen.
What about when Powell like when he's up for in February next year when he's up and he says, "See ya."
No.
Yes, I don't want to be ya. See ya. I got you in. You get yourselves out.
There's no way to get out. We've already had this discussion about 1,000 times on the show. The only way they get out is they just keep printing money and they hope the inflation problem goes away. Because if you go back to your economics 101 course, the only way to fight inflation is start raising rates. And they can't raise rates because the whole world's built on debt. So they can raise a quarter point and say, we can't go up to 7, 8, 10% because everybody lose their houses. So, I mean, they're in a really hard place. The only thing they can say is inflation's transitory and eventually go away because they can't go out and say, and even if they believe that inflation is sticky here and we're going to have inflation for a long period of time, they can't do anything serious about it. They're buried. They're buried in this hole they've dug, and there's no real way to fight inflation without jacking up rates significantly, and the repercussions from that are too significant. So all they can do is tell us it's transitory and hope it goes away.
I just think it is easier to go higher than it is to go lower. That's really what it comes down to for me. There's nothing fundamental pushing us in either direction, I think, and that's the point. That's why I think we're going higher.
So maybe we'll stay still.
The Tina trade, why not, Spencer?
Yes.
I mean, I'm right with this. Is why I hated bonds, 3 weeks ago, and the TLT sold off significantly. But I mean, people have been hating on bonds for those reasons. But now you've got the Fed, it's talking about actually tapering, and I just can't see when inflation's running, hot, and we know we've been running 4 or 5% even on the rigged indexes.
Rigged index.
Why are you going to put your money and tie it up for 20 years at 1.5%? I just unless you think rates are going negative and you're going to make it all on the increase in price in the bonds, I think that party is sailed. I don't want to own any bonds. I own a few preferred stocks, and those aren't even great right now because if you're getting 5-6% of preferred stock, it's barely beating their rigged number. So I think I got to own some stocks to try to keep up with it all. Because I don't think the printing press is going to go away permanently. I think it's transitory tapering. And I think eventually, if the market starts to show weakness, they'll just, continue the money printing press and the party continues. I don't see anything changing. That's why it's hard to just go out, sell all your stocks, move to cash because you're guaranteed losing, to inflation if you're in cash.
Also, I'm talking my book. I have no interest. It's against my own self-interest to be selling, right? So why would I do
You're
that?
young. Yeah.
Right, exactly. So why would I do that to begin with? So yeah, I'm sort of I'm long biased because of my age, right? That's normal. Joel's coming at it from a different perspective, which is also normal.
Yeah,
right?
Joel's getting ready for.
I think we're both where we want to be. Probably, it's probably good of Joel.
He's got a lot of stocks too, though. Still, Joel's still got a lot of.
Yeah.
What's your overall percentage of stock ownership compared to your wealth or whatever, if you want to say it? Do you have half of your money sitting out and half your money in the markets, or more than half?
More than half. Yeah,
more than half.
Much more. Much
more than half. So there you go. So he's still in.
Yep.
See, I got real estate though, so I don't know. I guess that's all part of the same. You're still invested, but
same thing.
Kind of, because they moves up with the markets. I mean, if the stock market crashes, the real estate market goes down with it too. So I don't know. I guess
it's not as liquid, right? But
It is right now, I tell you. Holy crap, our house is liquid right now. You put them on the market and they are scooped up above ask in hours in some cases. Real estate market has never been this liquid. So let's not get into that conversation. I'm on the fence. I don't know where we're going next week. I don't know where we're going next month. I don't even know where we're going in the next hour because this market is so choppy. It's hard to figure out. All I can tell you is what has been working continues to work. The contrarian is the one making money in this market, the one that is buying the dips and selling the rips. And if you're coming in and buying the dip Friday morning and selling the rip Friday afternoon, you had a great Friday.
Yeah,
if you're saying, okay, we're coming back and you're chasing, if you're the chaser, you are not having a good trading month here because chasing has been the recipe to lose. I would say contrarians are making money and the chasers are not.
Yeah,
You're giving the money to the contrarians.
Let's bring it to Friday because we basically ripped into the close. Well, we ripped and then into the close we sold off a smidgen there. I don't know what your thoughts on that were, Dennis, but it goes to what you just said, right? You're just buying the dip and selling.
You can't call it from hour to hour. You really can't call it. But as a trader, you don't have to. That's the cool thing, and that's what we're going to talk about. On October 16th. I say it all the time. I don't make the majority of my money from making calls, thinking this stock's going here or this stock's going there or this technical setup looks good. I try to do that with my swing trades and stuff, and I make a little bit of money doing that. The majority of my money is made from market inefficiencies. Market inefficiencies, where you're looking at relationship-based stuff, where stuff starts to make sense, and you look at the market from a whole different perspective. And I would say probably if I was, I have no numbers behind that, but I would say the majority of the money that I make on the stock market, on a daily, monthly, weekly, yearly basis is made from market inefficiencies, not making calls, predicting where stocks are going, but simply saying this stock shouldn't be here if this stock is here. And that's what we're going to talk about on October 16th.
And just to put a final bow on this, and we can do some individual stocks. The other thing that I don't like about the market is the volatility right now.
Oh, well, do I have a month for you?
Yeah. I mean, if you count the overnight range, and we got within 17 handles of the low, we had over 100-point range in the S&Ps on Friday, 105, 106. When's the last time we had those kind of ranges? What was the environment? When did we start having those kind of ranges? Answer me that. When was that?
You talking about COVID?
Yeah. I don't like the volatility. If we stayed at this area and then the daily ranges started to come down, then I know the buyers are out there. They're loading up. I think the volatility, and we'll talk about this with Tim. That would be a good thing. I mean, the reason you're seeing these crazy moves is because, everyone, this is dip. We got to buy this dip. No, wait. No, it's a rip. No one knows what to do. It's too much volatility. If the volatility calmed down, then I would be happy. Our average daily ranges are going up. That, and I'm not a VIX guy, but I'd have to say the fact that we're selling off overnight and there's high volatility, that's why I'm neutral to bearish on the market.
Okay.
So if the market calms down and we start having pops overnight, we get back to 25, 30-point ranges. Right now, our 9-day average range is starting to get up towards 60, which I don't use that as a good indicator. But hey, you know what? We're up 50 handles today. We closed 32.80 or 43.80. We take out, the high from last week. I don't know. It just seems like we're building a wall. We're getting up. We have the rebounds, but like every time we get slapped down at a lower level and lower highs, right? We are making lower highs and lower lows. I mean, that's pretty much simple technical analysis, right? You came off here, you came back over 44.50. You came down here, you took out the low.
Sorry,
yeah, I got it.
I got it.
mean, right? What do you see? More big red bars or green bars?
I see more big red bars and more big green bars in the future. I think we're going to chop around. And again, I think if you're chasing moves, I think you're doing it backwards in this market. There is a market to chase. 2020 was a chasing market. It's why it was so easy for everybody in 2020. You think about people who started in March, April, May, and they got spoiled in the stock market saying, holy, this is so easy. I'm going to quit my job full time because I can do this as a trader. You didn't have an environment that was just, going like this and all over the place and trying to figure it out. You had a straight up market. It was an easy market. Again, we look back to our long-term stuff. Spencer, me, Joel, we're up in everything. Everything was winning. You know what? That's not normal markets. We're in more normal markets right now, where you have stock picking, you have volatility, you have, contrarians who are coming back in. You have shorts that actually can make money in this market. But you know what? Longs can make money in this market too. You can be long only, you can still make money in it. So it's just not a simple market anymore. So if I'm trying to predict anything, it's that I'm going to see a lot more red candles and a lot more green candles. And that's why I'm going to continue to be a fader of moves in this market and not a trend follower, more of a contrarian. And that's what's working. It's why Kenny Glick is doing really well. I hit the bid. VWAP, where he's buying back. You're buying the pullback when it comes back to VWAP. It's a naturally contrarian strategy. You're buying dips and selling rips with VWAP too. So that's what is working. There's some market environments that just trend following works, like back half of 2020. You've got to identify the market environment that you're in. And then if you're using your core strategies, you're going to win more than you're losing, as long as you've identified that, hey, chop is continued. But if you think we're going into this just rip, roar, and rally, then you'll probably be happy to buy every dip and not happy when you're selling the rips. I think it's going to be more like this, and I think that's, because I think there's so many unknowns.
I'd be happy if it did that. I would be happy if it just like, hey, we hold that low from Friday, just consolidate here for. I mean, that's another thing too. We're like, oh, we're talking. Oh, is it going back all time highs? And am I talking? Oh, we're going back to 4,000. How about if we get IWM'd here? I mean, that could very well happen in the S&P. Now you talk about the trading range since January 206 to 235. You're at 222. You're smack dab in the middle here. So
Yeah.
sure would like to see that. I sure would like to see that breakout. But you guys want to talk about? Go ahead.
Before you do, I'm going to take one more thing. I'm going to take it to Mitch, and we did have the bet on Friday, and I got to say congratulations to Mitch. And look at what I did wrong on Friday. Here I just preached to everybody about buying dips and selling rips. And look what I did on Friday. And look who's listening in the background is Mitch, because he just absorbs everything. He's like a sponge. This is why he's become a very good trader. He just listens to everybody, absorbs it, and makes his own trading styles out of it. I'm sitting there and Ride's trading up 7% in the pre-market, and I get the guts. I was like, I think it could go to 10. I think it could continue. I think you're going to squeeze some shorts in this thing. And I thought it was going to go higher. And what was I essentially doing when I was trading up 7% in the pre-market? I was chasing. And I was actually, I didn't buy the stock, but it was the bet because I made a bullish bet on the show against Mitch. I was chasing and I was buying the rip. Two things doing exact opposite of what I'm supposed to be doing, but I thought I was going to be a hero. And when you're a hero in this market trying to be a hero, you usually turn out to be a zero. And that's what I was on that bet. And congratulations, Mitch, for identifying it. He came in right out of the thing. He's like, Denny's buying the rip. I'll sell it to him because he's doing it backwards. And you know what? I was exactly wrong. Mitch, you were exactly right to come in. That's the fastest bet that I've ever lost on the show. I lost it in 1 hour because that thing turned around on a dime and tanked. So, Mitch, fantastic call, buddy, to actually, take the bearish side of that. And yes, I owe you a lunch, and Joel owes me 10.
Yeah,
so Joel only owes me 9, and he owes Mitch a lunch.
I know. You know what he did? I don't know where it was trading at in the pre-market, but I remember guys in the pit used to do this. And let's say it was where the pre-market show was between 8 and 9 or whatever. Let's say it was trading at 865. Okay. And Dennis goes 865 for 100. And the big local goes sold.
It
right?
did.
And then, but then you know what Mitch did? He offered it lower. He said sold to you, and then he goes 50,000 at 860. So you're thinking to myself, wow, he just sold it to me at 865, and now and that's way that's
how it was done in the pit back in the day.
Yeah,
bullying. There was a lot of bullying in the pit.
Yeah, and that's what he did. He hit your bid, and then he offered it lower. Then everyone's like, "Oh, Dennis is stuck." And that's what everyone thought. They're like, "Oh, let's kill Dennis."
They rocked me on that one.
Look at that.
Look, I didn't put real money in that thing. That was a bad call, man.
Yeah, that was. But that was fun. That was fun.
Okay, so we haven't talked any stocks really, but
Let's
we got you
talk
an overall feel. So what we just told, so we do that, what are we going to tell you? What we told you, or what are we going to tell you what we told you? What we told you over the last 26 minutes was fade trade still working. That's
Yes,
what
sir.
it was. We could have said in 10 seconds, but we went the 27-minute way to
We
say
just
it.
talked too
Fade
much.
trade still working.
There's a couple people in the chat asking about Tesla, so let's just move on
We
to
got
that.
to talk about
We
Tesla.
got to talk about Tesla because the bottom line was their Q3 deliveries were strong. They came in above basically every estimate that I saw. They delivered a little over 241,000 cars last quarter. Estimates were in the 220 ballpark, so from 241 to 220. So a nice beat there. Almost all those deliveries were Model 3 and Model Y. That's basically what their bread and butter at this point. That 241 thousand delivery figure compares to 201,000 the prior quarter, and it comes in the face of companies like GM coming short on their deliveries and blaming the global shortage of chips. And Tesla said, "Aha, not so fast, because we can come in above estimates despite a global chip shortage." So
let's see the chart.
Wedbush was loving this report over the weekend. There's not a lot not to like about the numbers.
Good numbers.
Yeah, good numbers.
They're showing how it's done. Tesla's been doing a lot of things right. One thing is, and Kathy Woods goes on her Twitter rant saying, well, yeah, Tesla didn't have any problems with chips. Why is GM and Ford having the problems with chips? He's saying it's all BS. Well, when you're only selling a fraction of the cars at GM and Ford, it's a little bit different game there too, Mrs. Kathy Wood. But anyways, we can't argue with Tesla. The numbers were very good. So instead of trashing GM and Ford, she should have just been talking the Tesla. And obviously, it's rightfully up here today. Those were excellent numbers. With that being said, it hasn't been the market to buy rips. So I'm not changing my tune and buying the breakout on Tesla because I was trying to buy a breakout on RIDE, and we saw that work for me. And also, Tesla got a lot of highs, 850 to 900. That's a long ways away. I still, it's still definitely bull trend. We've been talking bullish on Tesla on this show for a little while here above 750. I said as long above 750, bulls are clearly in control. They still are. Again, though, I'm not buying on the day. It's up 21 points, and it was up even more than that earlier.
Yeah, it was
Joel.
up. Yeah, this is a interesting chart. Kind of a weak market. The street kind of leaning like a little bear. I mean, not bearish, but you had 4 lower highs, right? So you had persistent sellers out there between 775 and 795. And now you're breaking out or attempting to break out. I'd say keep an eye on that pre-market high of 802.50. You get to that, you take that out, keep going, 8.5, 8.10. I think the longer you take to take out that pre-market high, more of a chance of a fade. What was your high from last week? Your high from that's a good number. I mean, that's a good number too, 799. So there's your zone. You're trading at 795.5. So it's off the high. Let's see if the bulls can get it back up there.
I mean, I will give credit to Jason Raznick for saying, 3 years ago that you're going to start seeing more Teslas on the road, and I probably see, I don't know, a Tesla a day on the road. I'm not joking.
Oh yeah, there's more than that even probably than seeing a Tesla. Yeah. They're out there. I mean, Jason's been all over this. I mean, you can give Kathy all the credit in the world, but Jason Raznick's been all over this call too.
Oh yeah,
and it's been in the biggest position in his portfolio for a long time as well.
It's basically made his life. Like this Tesla call made his life. He's been. Everyone has that one call that made their life. This is Jason's call. I mean, he's been pounding the table for
every time he's been on the show.
7 years.
By Tesla. Yeah.
He's been on this for 7 years.
Yeah.
Right. So maybe more. I don't know.
Yeah.
So congrats to him. I mean,
yeah, Jason's been all over this. So great call, Jason.
Yeah.
Other stocks here, and we obviously have a light earnings week, but we've got to talk the oil spill.
Yeah, let's go to the oil spill. General rule of thumb: if you're gonna be responsible for an oil spill, you're gonna have a bad time. And the company at the center of the spill off the coast of California over the weekend in Orange County is publicly traded Amplify Energy. AMPY is your ticker. Responsible for about 126,000 gallons off the coast of Orange County, from Newport Beach to Huntington Beach, distance of roughly 6 miles is what they said. They said it's already been the source of the spill. The pipe burst has been identified, shut off, but now they're going to deal with the cleanup. So AMPY is your ticker of the day, and not fun. Not fun.
We always say fundamentals trump technicals, and in this case, there's no better example than this. Here's a stock that's been straight up for 8 straight days. closing near the highs on Friday. I don't know why the stock was just blasting off in orbit. That is all gone and then some from obviously an
You're
oil
back
spill.
at 250, $2.
Yeah, technicals just throw them out the window when you have an event like this happen, and boom, you go all the way back down. People will say historically, you can buy the dip on these things and these things work. I had somebody give me the example of BP. I will tell you the opposite, because when BP had the oil spill, that stock was $45 or $50 a share. We are now a decade later, and it's at 27. It has never, ever come back from that, which is incredible to think about. I mean, a lot of oil stocks have been depressed, but it never came back from the oil spill. So I don't know, man. And if you're using BP as an example, it's hard to recover from these things.
Wow. I mean, people are just jammed in this. Look at this. I mean, you could, the last 8 days from 4 to nearly 6. I mean, there's a buy or $2 here. I mean, they're making that painstakingly obvious here. You've gotten under $2 a couple times, 185, 190. You see those lows. So now you're moving up. So I have no idea what the short interest is in this or whatever. But, if you're buying the dip, maybe this $2 area, just the way it's traded on the 15-minute and the hourly, there's a good buyer there. I mean, this is here. This is Friday, and I don't even have $2 on this chart here on the daily. We're here. We're beneath this line right here. So we'll see. I mean, there are buyers coming in at $2. Where if this thing on the upside, I don't know, because you're gonna have all these like short-term buyers. People are, I'm not into stock. This is like a crazy move. They'll buy it at 205 and sell it at 225. They don't care if it ever goes back to that area. But boy, tough. A lot of people jammed on this one.
Everybody got caught because it wasn't like it was leaking. It wasn't leaking into the oil spill, pun fully intended.
Wow,
I had to do it.
Come on.
I had to do it. It wasn't leaking into the oil spill. It was running into the oil spill, and it ran and ran straight up. Nobody saw this one coming. I don't even know what to say here.
Momentum. I mean, it was all mobile. I mean, if we're going to use a chart for not chasing on for the event, this is it. Is there anybody else that's affected by this, or not
all
really,
oil's up because of it?
Yeah, well, oil's always up.
Oil's up a little bit this morning.
What's the name of this? Wow, we'll see. Amplify Energy.
What's going on, GM?
GM, there's a new activist stake. So the same firm
just coming out. This breaking, I think.
So it broke a few minutes ago.
So they were out earlier.
So the same firm that
there's something else coming out.
The same firm that there's a couple of things. There's multiple headlines here. The first headline was the same firm that won board seats on ExxonMobil has taken a stake in GM engine number one, and also there was some cruise guidance, Chevy cruise guidance that they came out with. But also, I will add that, and I mentioned this on Friday. I definitely said this on Friday. Is GM has their big annual whatever you want to call it, like an investors, investor day, whatever. But it's like a multi-day affair, and similar to basically what Ford did, right? With they talked up their EV spending and investment and yada yada yada. That's going to happen this week. There's going to be a lot of EV headlines with GM this week. A lot of EV headlines. So I mentioned that as a potential catalyst on Friday. I didn't realize it'd be this morning, but there's going to be more headlines coming for GM.
This guy gave a 5-year price target of 150, Dennis.
Wow.
Who is this?
Chris James.
Chris James? 150. Wow. I'd like that. That'd be good for me. I rarely add to losers. I rarely add to losers, and I added twice to this again. I added some at 49, and then I was like, no, I'm buying even more at 49. So I believe GM is now one of the biggest positions in my long-term portfolio. I don't think it's the biggest because I have some pretty big positions that have just grown over the years. But for like an initial position, this is about as big as I start. Now I might be wrong, and obviously I'm up 10 or 15% in now, but a month ago I was actually down in it after being up significantly. So I don't know. It hasn't been one that's worked out great. The technicals aren't as good as they once were because now you do have some overhead supply issues here. But with that being said, I still think GM's going to be a major player in EV. I think Ford's going to be a major player in EV, and they remain whole. And they're fairly cheap stocks. So
So be on the lookout for GM headlines. There's going to be more coming.
You know what? The last time when this thing went into the 60 handle, it was or 64.30. It was right. They did one of these dog and pony shows too. I remember that, and everything. So maybe it's in for one of those. I don't know if it's going to go back to 64, but I remember them doing that. Boom. I mean, you're getting back half of this move right now. Right now, 50 pre-market high just under 56 is a big move for GM. I'd keep an eye on 55.91. See you break into that 56 handle.
All right, it is 8:37 on a Monday. You all know what it's time for. Market Structure Mondays with Tim Quast, the founder and CEO of Market Structure Edge. Tim, how was your weekend?
It was good, thank you. It's beautiful autumn weather here in Denver, and we just came back from Austin. I was soaked in sweat with Neil Hamilton on a show last week because it was 95 degrees down in Austin, and yeah, and I was sitting outside, here it's chilly. You guys look good. I caught a little bit of your GM discussion.
Okay, well, let's talk GM. Give us some market structure behind GM. Is there any, let's just see if the market structure likes it. It's one of the biggest positions I've got because I just think it's going to be a major player in EV, and I don't think the story's going away. But give me what the market structure looks like. GM.
Okay. Can do. And Joel, I was laughing about your dog and pony show comment because that's my profession, the investor relations profession. And Ford is a customer of ours on the data analytics side, the public company data analytics side. But I have spent 26 years in the dog and pony show kind of profession, the investor relations profession. And you're right, these analyst days are a big deal. A tremendous amount of effort goes into who's going to say what and how are you going to present your story. And the pandemic changed the way that this happens. It didn't used to be I don't know what they're doing, whether they're doing a virtual event or in-person event, but Ford's was a big virtual event and it was a huge hit. But it's been a period of adaptation for the storytellers, the public company storytellers, the investor relations profession. But let's take a look. So, and by the way, many of you use Edge who tune in or you're familiar with Edge, but you can follow along if you like. It's free you just go to marketstructureedge.com. You can put your name and email address in, and you can do this. It's something I think is very important to think about. There are there's the fundamentals of a business, how they may perform over the long term. I listened to most of the Chris James interview this morning from Engine Number One on Squawk Box, CNBC Squawk Box, and we could talk about that too. We have been party to many battles with activists. From Starboard, Carl Icahn, Elliott, you name it, we have our data has been used in those situations. So we're very familiar. And Engine Number One is a different kind of activist fund. In fact, they're trying to back away from that a little bit here. They're saying they're not taking an activist approach to GM. They're taking a collaborative approach. They believe that the total commitment to a battery electric vehicle, not hybrid, is the approach for the future, and that's what Mary Barra has done at GM. Okay, so let's go take a look. I think you can see this now, right? Am I right?
Not
there.
Not quite yet, but we're getting there.
There we go.
There.
Okay.
We're getting
hide that, and I'm going to use the. This is the beta version of Edge 2.0. We're going to release this it's been in beta test for a while here, but it's a browser app now, it's really cool. I think it's fast and pretty slick. But if you want to try this beta version, people, just let me know. Send me an email, tq@marketstructureedge.com. I can put you on the beta list. Okay, so I added Ford and GM to this list while I was sitting in the green room.
Yep.
And let's just look at GM. So here's the, I think of this as supply and demand. So for those of you who don't know about market structure, the behavior of money behind price and volume, We're measuring supply and demand, and it's a 10-point scale. The more time stocks spend above 5, the better they tend to do. So a great thing to do is let's just look at GM year to date and say, well, how much time has it spent above 5? Well, it spent a lot more time above 5 until about June, and it's had trouble since. But look at this buildup that we had before this news. So when the stock is above 5, at 5 or above 5, I like to say you buy rising demand and falling supply, because that tends to lift prices. It's the same as in the economy. If the supply chain is struggling and there's solid demand for something, the cost of it goes up. The lumber was an example during the summer. So here we have rising demand. Here's an interesting thing. So see this explosion in short volume? Short volume is the percentage of daily trading volume coming from borrowed stock. And this has a sort of meme stock characteristic to it, believe it or not. What happens behind the scenes is, if there are no actual sellers, there are a bunch of folks like Dennis who have big positions in their long-term portfolios in GM, and so there's no stock for sale. But then a whole bunch of orders show up in the pipeline to buy GM at higher prices, limit orders, and so brokers can manufacture stock to fill those. That's part of how we have a continuous auction market, and that is absolutely happening here. So that could mean that you get a real pop in GM. It's possible. Overall, I would say over the year to date, it's not been great. It's spent a lot of time below 5, and that's why you haven't seen great performance. It's a supply-demand issue, not a story issue.
Yeah, it's kind of just hung out. I mean, we started the year around the same price, so we haven't done a lot. We're up a little bit on GM. Obviously, January had a big move from 40 to 450, but after February, which is the story for a lot of stocks in the overall market, I think after February, there's a lot of stocks that have just kind of been shopping around going nowhere. You can see it in the IWM. I mean, since February, the IWM is flat. So it's been a market where I've been arguing that contrarians have been getting paid. And if you've been chasing moves, you've probably been paying the contrarians, because we really haven't gone anywhere in the overall market for about 6-8 months.
Yeah, it's interesting that you say that, Dennis, because I think about it from a broad market perspective here. This is it's an algorithm that tells us about the supply-demand balance in the broad market, and so that's this part of the graph. The seismograph is SPY, proxy for the S&P 500. And I too have been saying since about April, the supply-demand equation has lost its mojo. It's not that it's been bad. You can see that the line has stayed between this green line, which is 4.0, and the red line, which is 6.0. And right in between is 5. So if you have a 5 to 5.4 market, that's a growth at a reasonable price market overall. But you see it show up more in the broad measures than the full composition of the market. Half the S&P 500 as of last week was down more than 10%. 90% of the IWM, the Russell 2000, was down more than 10%. So you might say, well, how is it then that the broad measures are showing gains when so much of the market is not? How is that possible?
Yeah.
And it's because of statistical sampling. It's an important thing to understand about exchange-traded funds. An exchange-traded fund will pick a basket of things that are representative of what they're trying to track. And that basket is probably going to be the better performing elements. So then if you own things that are part of whatever it is, let's say the communication services exchange traded fund, which the ETF holds like 20 components, and there are 130 stocks in that sector. Well, if you're holding those that aren't in the basket, they can go down and the broad measure can go up. And the same thing happens here. But I agree, Dennis, that the momentum came out of the market about in April. And so ever since then, we have struggled. We had a very good day on Friday, which the data predicted. I sent a note to the edge users and said, I expect with this turn in sentiment, we're going to have a nice move. But how long it lasts will be interesting.
All right.
It can't. If we can't get back to 5 and stay there, we're in trouble. Sorry,
Tim,
Spencer.
Tim, there is some demand in the chat for you to look at Alibaba.
Alibaba.
This stock,
Yeah, okay.
before you get into it, I just want to say the market goes up and Baba goes down. The market goes down and Baba goes down. Every single day, the stock just goes down. And I have it in the long-term portfolio. We know I sold half of it back when we didn't know where Jack Ma when it was 240. I wish I would have sold it all because it's now 140. This stock has got to be the most hated stock out of all the mega caps out there. And its valuation is cheap, but I mean, when you got the China Communist Party actively fighting them, this is what happens. So what's market structure say here? Because this stock just doesn't stop going down.
It's miserable. I mean, look at the amount of time.
It's miserable as a shareholder here too. I'll tell you that. It's making like 7-year lows.
So there, you could say, well, there's a faint chance. You may have, if you're in it and you want to get out, you may have a chance in the next week because demand kicked up just a little bit and supply went down. But just look at the chart here. So again, demand on top. The green part is sentiment. This is price, and when a stock spends that much time below 5, it's just no good. That's all you can say. It's the demand for this stock just isn't there.
All right, you heard Tim. If you're into this stock and you're trying to get out, you may get a chance. This week, but
right, it is just not good. But there, don't sell falling demand. There's no sense doing that. I say it's like the freeway. If you miss your exit, don't compound the mistake. Just go on to the next one. You just have to take the next exit.
Wait for the exit.
So if the demand side rises, then leave, because that may be the only shot you get. It happens to all of us. I did this with Discovery B last week. I was not paying attention, and it was 10 and 59% short, and I should have been out. And so I lost a little bit on that. I'll show you another one. Here's one where I kick myself. So I looked at this on Friday and I said, I should buy this. And I teed it up in my Interactive Brokers account, and I didn't do it. But this is what you want to see. This is the exact opposite of Alibaba. See this rapidly ramping demand side and supply side well below the trend? Well, that's how you get a 12% gain in a day. That's what you want. And I keep a momentum portfolio to look at with a set of things that spend a lot of time at 10. And I always profile them. I'll go back test to make sure that this will work. But that's the kind of stuff that you want to buy.
Tim Quast is the founder of Market Structure Edge. Joins us every Monday for Market Structure Mondays. MarketStructureEdge.com is your link. Tim, always a pleasure, sir. Thanks a lot.
Tim, if you miss your exit and there's no cops around, you can do a U-turn.
You could, but you might be going the wrong way down
Just
the freeway.
Don't back up on the freeway.
Don't back up.
Don't back up on the freeway trying to get to the exit. Just see if you can, where it says emergency vehicles only. Just slip around one of those. Thanks, Tim.
And that's not driving advice here. We don't give trading advice. We don't give driving advice.
That's right.
I feel like Joel knows it from experience. Thanks a lot, Tim.
Yeah, he does.
Good to see you guys.
All right. Hey, it's 8:50. Let's do some taker time.
Market's coming back. I just want you to know, y'all.
Buy the dip works again. What the heck, man?
We
buy the dip, sell the rep.
Back. We're like almost
repeat.
Unchanged here, down 3 1/4. That's it. Now we're down. We're looking at unchanged. That's 43.75. So if you're looking for unchanged on the session, that's what you're going to get.
Let's do
Upstart. I want to do Upstart. Somebody just Noah wants to know Upstart. I want to talk Upstart here too, and I'm going to take it. Ugly candle Friday. You got some people. You're breaking trend here. It's a very steep trend, and you're breaking it here now. I've obviously Kramer's been bullish this for a while. This stock has been an unbelievable performer. It always kind of depends how you draw the lines, but you can kind of see the steep line, Joel. If you take that Jeff Mackey purple crown and draw it, you can see that you're just breaching trend here now. There's a lot of air below. I think I'd be a seller of rallies into this. So,
let's see if I can actually do that a trend line for you.
You got the purple one?
Wait, while Joel is doing that.
Gotta be purple.
Wait, while Joel is doing that, I have a joke, and it smells like Upstart in here. You're like, What's Upstart? No, that's like what's up, dog? What's Upstart? No, okay, fine.
That might be the worst joke ever told on this show.
Joel said a lot of like just awful jokes on this show, one-liners. That one might have trumped it.
All right, that was bad.
I don't know. Maybe somebody in the chat got it, but I was like,
Is
that
there
went over my
any?
head.
Is there any?
Sorry,
I'm
Spencer.
sure there's not. But big couple red bars. 3 out of 4 red bars. We're traded down $4. That's only on 12,000
trend.
shares. We did. I think we did break the trend line. Let's see. Oh wow! But we're not even at
I'd argue
yesterday's
it's
low
broken.
yet. We're not even at the low from Friday yet. 285.55. So. We're down. Wow, this thing really. Am I looking at it daily?
Oh, it moves, man.
Oh
It's a
my
mover and a
Lord!
shaker
Look
of the
at
stock.
this thing. I mean, maybe you get a look at it. If you're that bearish on it today, you might get a look at unchanged 98.77. What's wrong with that? If you're leaning that way, but long ways to go down to yesterday's low at 85.55.
I wonder Merck for a second here.
Merck's back up.
Merck's at 85.
Why is it up today?
Because you know why? 2-day move.
Again, they just they're going to get popping another 4% just because. Oh yeah, don't forget the Merck pill.
Yeah.
Wow. So wanted to give it back on Friday, and then it
didn't.
just can't. It gets a lot of love, I think from media, obviously over the weekend, everybody talking about it. Everybody's coming in again. I'm long Merck in the long-term portfolio. I've been in there forever. I'm probably not going anywhere. I will talk against my book and say if I had this on for a trade, I'd sell it. But it's been in the long-term portfolio since 30. I'm holding on to it. But I think you're supposed to sell in this news. To be honest, I think you're supposed to sell in this.
You're at your February high from last year at 85.03. You kissed that. You traded 85. So if you've been waiting to sell this since the pandemic, there it is. 85.03. Almost got there in the pre-market. Your next monthly high is not it's a ways away from that, 87.83. So keep an eye for follow through the pre-market high. I think if anything, you'll see, if you want to buy this today, no guarantees, but the way it moved on Friday, you might get a chance to get a little cheaper here than up 329 if you're playing it from the long side. Where that is, what's the top of the range from Friday? Maybe if you get a quick bolt down to there, 84.34 or so. If you're not afraid of, gaps, I bet you could get long there at the top of Friday's range, 84.34.
All right, Neve was asking about Regeneron, which is trading off the Merck headline.
Oh yeah, they're
I'm a horrible call by me here to add to a winner. I never do that, and I added to the winner, and I raised my cost base. I bought at 575, and I bought more at 640 on that pullback, or 645 on that little consolidation because I thought it was consolidation to go higher, and then obviously the Merck drug just implodes the position on Friday. I still think it's cheap. I still have it in the long-term portfolio, but holy macro, it's a bad call to add to that.
As long as Merck's going up, man, all these things are going to be under pressure. Regeneron's going to be under pressure.
Yeah, it's all of them. It's
Pfizer,
alternative, right?
Pfizer.
Yeah, Pfizer shrugged it off, and we talked about that. I'd buy the Pfizer dip. Pfizer's cheap enough. I don't know about the BioNTechs and all that, but Pfizer's cheap enough. I own Pfizer in the long-term portfolio. I still think Pfizer dip is to be bought.
Okay, let's keep going here. Got 5 more minutes left. A few more tickers from the chat. Let's take a look at Cloudflare, NET.
It's been a while.
Yes, I know. It's been
NET,
a minute.
huh?
Trend's broken though, man. Trend broke here too. Resistance up at 120 now. Major resistance up at 120. I don't like that the trend is completely broken here. I think you're selling pops.
120. What about getting through that wall 115 there?
There you go.
Yeah, 3 highs.
One wall, you got another one.
Yeah. Below, and if you take out that low from you're a ways from it, but you take out that low from yesterday, 108.93. Man, it's just not a lot in there. Only one daily low protecting it from 105.61. But boy, you might get a shot at that 115 area today.
No, I don't like it. I don't like the chart.
All right, here's one from Slow Black, who we don't talk about ever. MTOR, Meritor, the industrial. The
Gotta be a headline on it. It's trading up 7%. I don't know the headline.
Oh,
what's the news here?
You're right. It is trading up 7%.
Yeah, it's gotta be a headline here.
I don't actually see. Let's see what we got. No, we got nothing. I got nothing.
I'll go hunting further.
Because it's not the most active.
Is this a Reddit stock?
I don't think so.
Announces portfolio.
wait.
Wait, this got some GM.
Yeah, it might be
Action
trading up,
here.
might be trading up with GM
Mm,
because they're like an auto parts manufacturer, right?
yeah.
The news
Oh,
is
Barron's had an article.
Barron's got it. Wow.
Ooh.
Wow.
Barron's had an article on this.
You're a buck off that high at 20 in the pre-market. You got the 25.30 August 16th high 25.34. So let's get back up there, test that. That's your resistance. But longer it takes to get back up to, that's a big move for a Barron stock. Maybe if you want to buy it, look to buy it on the cheap. 22.77. That was the top of yesterday's range. So look for that 22.77 support. You got resistance with that pre-market high coincided with the August high. Pretty good resistance.
So this
Currently
is the article from Friday, and this overlooked parts maker is from Barron's. The title, I'll just give you the title of the article. That's all I need to know. This overlooked parts maker is ready for an EV future. Its stock could double.
Wow.
So that's your catalyst is Barron's.
Wow. Here, let's take a look at Altria MO. They got hit on Thursday.
Wow, we never talk about that.
I know. On Thursday, the U.S. International Trade Commission ruled that Altria had infringed on a patent, so they have to stop selling these IQOS heated tobacco devices because they infringed on Reynolds American. So that's what the news was on Thursday.
It's got an awesome dividend, 7.83%. It's hard to buy those ugly candles. I'd let it sit and consolidate and make sure there's not follow through happening here. I'd wait for a consolidation spot before just striking. I think you're early. If you strike, it might be the bottom, but it might not be. So I'd wait. Just my
44.89. You got a nice pop off that. Let's see if it comes down. Let's see if they really want to make this 45 level. I mean, that's on the daily. Not much there on the monthlies because you dropped. Oh yeah, 45.16 was your low in April. So let's see if the big boys step up here and defend 45 over the next couple days, and then turn back up. That's a big down move. Maybe you can make one. See how I hit this 49 like this? Maybe you could do like a 45er like that with 3-4 lows in the same area.
All right, it is 8:59. Guys, any final thoughts before we send you on your merry way?
Nice climb back. I like to see us get over that close at 43.75, hold, and then challenge that pre-market high. That's all I'm looking. Nice rally by the dip overnight. Let's get unchanged and then work our way into the pre-market high. That's about it for me.
There's one imbalance jumping out to me, and that is Merck. 1.2 million to buy right now. Projected open is $90. That is obviously very early, and it's not going to open that high. But holy, it's a huge buyer in there this morning.
I'll see you up there, Dennis. I'm just kidding. All right, guys, have a good rest of your day. I want to bring Money Mitch on for a second, but before I bring Mitch on, let me just say I have not asked y'all to hit that like button today. So let's go ahead and do that. We're only at 273. Let's get to like 500 likes. I think we can do that. Second thing I want to say is next week, if you can believe it, next week is our first in-person conference since before COVID, the Benzinga Cannabis Capital Conference. It'll be a hybrid event, so there will be some virtual aspects and some in-person aspects. It's a 2-day event. It'll be next Thursday and Friday. I will be there myself. It's at the Marriott Marquis in Times Square. And here's a quick preview of. Oh wait, no, my trailer is not here. I'm sorry about that. Oh yes, it is. Here's a quick preview of what to expect next week, and I highly recommend you all check this out. All right, bzcannabis.com. Quick note, Matt Hammond, who's usually on at this time on Mondays, he'll be on with me in 3 hours. He'll be on at noon with me on this channel. So Matt Hammond will still be on today. If you miss him, don't worry. He'll be on later. I promise. Let's bring Money Mitch on for the next few minutes. It'll be Mitch and I. And then we'll head off into David Green at the open. But Mitch, good morning. How is your day going? How's your weekend?
Good morning. Good morning. First thing I got to say is go Rays. Yankees sneaked by, so I'll give you that.
I was thinking about you yesterday. Almost texted you, but I didn't want to jinx anything, so I didn't say anything. But it was a very stressful Sunday for me. I'll tell you that. And Mitch, we may talk about this again in a couple of days, but I'm not going to count my chickens.
Definitely. Let's go ahead and let's take a look at the market. Is the reopening trade really on? Let's take a look here.
See, that's what you're asking yourself, isn't it? Right today is I know that you've got some you've got some interest in the reopening stocks.
Yeah, I took some swings overnight. I have CCL, not looking too bad. I have this underneath 26. I have it at 25.95. So looking for 26 to hold today. We're right now trading at 26.40. So if we take a look here, we're already trading up in the pre-market, starting to push on up. We'll see if we can get above that level, get towards 26.50 today. Close at 27 is what I would want to see. Okay, so let's take a look at some of these trades right now. So, of course, also airlines. I mean, you guys saw a couple of those take a nice push. AAL, you can take a look here. If we look at the airlines overall, this is an index. And a nice push on up that we got last week. UAL, really strong candle. JetBlue, another strong candle. Those are my two leaders that I would watch. And then from there, you can look at some other names to see how they react. DAL, look how that's been pushing really well. We'll see how these continue moving. But one that might surprise you.
You have a swing long in Carnival. Is that what you just said?
Yes.
Yeah.
Swing long in Carnival. And I'm also swing long in ULCC, Frontier.
I always forget about that one. How is Frontier? That doesn't look
not a looking chart, right?
It doesn't look terrible. Let me compare it with the other airlines. That's hard because there's so little history, but
exactly. So my idea is for this one to come back to that IPO price, right? It opened at 1861.
Interesting.
And if it could come back to that level where it IPO'd, in
so the IPO was priced at 19 and it opened below that at 18, like you said, 1861. Wow. You don't see that every day.
That's what I'm looking for. That move back up to that level. It doesn't need to go past that. That's not what I'm looking for. I'm just looking for that IPO level.
Would you have a target on the downside?
Downside 16.
16? Okay.
16.
Cool.
Right there.
I'm into it.
16 to 19, 30, 50 cent risk for $3 gain. Let's do it. All right. Let's keep going. Let's go to the next one. This one's going to surprise you, I'm pretty sure. Let's go to AMC. I'm liking this chart today. Spencer, yes, I said it. AMC. I am bullish this week. Reason why, Spencer, is reopening trade, right? If this is really going to start moving with the reopening trade, one thing that happened this weekend was a post-reopening record in attendance of 3.9 million.
I saw that.
We'll see how this continues to affect the industry. One thing that I'm looking at is if the reopening trade is really on, AMC, GME are going to lead our way, baby. Let's go ahead and pay attention to those today. I have a feeling you might be looking at me at the end of the day and being like, man, Mitch, come on. But one thing we need to see is continuation. So for AMC, 37.46 needs to hold on any pullback. I love the hourly chart. Look at this sideways action from that pop that we got on Thursday. So we got a pop above 41.78, pull back closer towards these 37.46. Now I want to see 38 hold on that pullback and really push towards 40. Once we get that push towards 40, I'm looking for a move up towards 41 today. And that will start setting up this chart to really look bullish. If it gets back above this high, which is 41.78, and we get into the 45 range, I think we could end up at 50 by the end of the week. GME also on my watch. Really nice chart, actually. If you look at the weekly, we're starting to get towards these levels. What I like is on the daily chart, you have the 200 below you, 50 just slightly above. If we get a push towards 200, the 50 is going to be right underneath it, really giving it that support. And we could see GME make a move towards 200 this week. That's going to be my call on GME. Let's keep it going. I want to keep bringing the fire. TripAdvisor on my watch. If the reopening trades on, this is one that could get moving. $40 is going to be really important for TripAdvisor to get moving here. If we looked at booking BKNG, look how this one's been starting to move up towards the resistance, trying to break through. That's why I'm looking at these guys. Another one that you can look at if you like a little cheaper stock, TRVG, Trivago, $2.60.
Wow, I have lost track of this one. Is that $2?
Yup, you got that, Spencer. You know I like to keep my eye on a little bit of a cheapy play.
Wow, I remember when it was like double digits. That was a while ago, I guess. Holy cow!
Look at the weekly chart. It's come back down all the way from this breakout in January. Looks like we could come back for another move, right? Last time we made a move up was what? We started the move back in October. It kind of dipped down, and then we broke out into November to December to January. Let's see if we get another pull down, maybe 250s, and then a big push towards 280s. $3 is what we want to see on Trivago to continue making moves.
I've got one that I'm very, and there's nothing new if you've been listening for a while, but I'm very, very concerned about here is Facebook. I don't know how many of you saw the 60-minute story last night. There was nothing that was like that new. It was just like more of a continuation of events, which is that Facebook has all kinds of problems, and the negative headlines, be it from the press or from Congress, are not going to go away. If you look at the FANG stock, since we made those all-time highs back at the end of August, Facebook has lagged the group by a not insignificant margin. On the other hand, though, I still feel like the market is not fully appreciating the problems that Facebook has. So I'm strongly considering buying some long-term put options or selling some long-term calls, because I think Facebook is in serious trouble here. I think they're in legitimate danger of getting broken up in some way, shape, or form. Probably, I mean, definitely not this year. Maybe even not next year at the pace our government moves. But I think Facebook is in real trouble, and I think the negative headlines are not going away.
Yeah, I think you got to be careful about overall big tech here, because if you take a look at it for the year, they haven't really done that well, right, Spencer?
Yeah, let's just zoom out.
Let's take a look at those.
I mean, yeah, let's just go start of the year. I mean, they've done pretty. I mean, Amazon, which we mentioned off earlier on the show, right? Amazon's having a bad year for Amazon standards. Apple too for Apple standards, but Facebook, Microsoft, Google, and I didn't even put. Let's put Netflix on here. Netflix is at all-time highs. So, I mean, I wouldn't say they're having bad years. For the first 9 months of the year, they were pretty much the only stocks you wanted to own. It hasn't been the case for the past month, obviously, but with the exception of, I don't mind any of these, with the exception of Facebook, right? I just think Facebook has some real fundamental structural problems that they're going to have to deal with. The rest of them, not so much. I mean, Amazon's running on all cylinders here, right? Apple too.
Spencer, will it become another MySpace?
Who, Facebook? Well,
yeah.
It's apples and oranges. Like MySpace got out competited. It's not even a word. I don't even know if that's a word. I just made it a word. Like Facebook beat MySpace fair and square by competing. I think we could see a spinoff of WhatsApp or Instagram. I think it's not out of the question. And Instagram is the growth driver. That's basically it.
That's the truth.
Right. I mean, so I'm seriously concerned here for Facebook. I think if you go back in the last couple of weeks, you see Facebook lagging the peers, but not by as much as I would have thought. Right. So let's go end of August, because that's when the all-time highs were. I think Facebook prints money, and I think this is frankly not a story that's going away, and so I'm concerned about Facebook. So that's where I'm at.
All right, so I'll pivot here for us, and let's keep going with some different trades. And this will kind of lead. We can go into a crypto update also.
Yeah.
Let's take a look here at Hut. Hut
Oh,
890.
yeah.
Can you take a look at the
They
news
had some
on
news this
Pro?
morning. Yeah, they had some news this morning. They oh wait, was it this morning or was it Friday? Maybe even Friday. No, it was this morning. They said they mined 264 Bitcoin, or they minted 264 Bitcoin in September. So the total Bitcoins held in reserve as of the end of the month, 4,724 Bitcoin is what HUT owns.
All right. So one thing to look at, it's just been in a big trend. When it came down towards 4, popped back up, looking strong, trying to hold prior resistance as support now. So $9 on pullbacks is what we want to see hold. But really, I mean, you can look at Hut, but I also want to take a look at a different one.
Yeah.
BTCM is Bit Mining Limited. I
Yeah.
like this chart. I like how it's battling to get above 860s and 850s yesterday, Friday, and finally just closed sideways here. If I think we get a big pop straight through 9, this is going to be looking really good to start coming back towards $10. Can it get back towards 12? I think that you're pushing it a little bit, but could we get back towards 10 and then kind of stay choppy between $8 and $10? I could see that happening. So I'm looking for a little pop today. BTCM, and of course BTBT is another one you guys can keep on watch.
I think BTBT also had. Oh no, that was on Friday. They had their numbers out, or maybe they didn't. I don't even know. Okay. Bottom line is, all the miners. Guess what? They mined more Bitcoin in September. That's what you need to know. Real fast, low. Let's just do a quick crypto update. Okay, mostly right on the screen here today. I got to say, I'm a smidge surprised because we did get a positive hemline last week and again this morning coming out of the Fed. At first, the Fed was like, "Yeah, look, we're not China. We're not gonna ban cryptocurrency. That's just not what we're about." The headline this morning was that they are, and I don't think this is new information, but that they are like investigating, or I think that's the word. Investigating was basically some kind of digital token for the U.S. A U.S. digital currency. Basically, is basically the Fed's looking at the benefits and the risks, and could we do it? I would have thought that would have been a good catalyst for crypto this morning, but you see Bitcoin trading in the red. Whoops, where's my Bitcoin trading in the red, ETH in the red. Most of the majors in the red, and so I guess we'll wait and see. But we're coming off a great day on Friday for pretty much every single crypto out there. So maybe just some natural digestion here, but to me, the fundamental picture on crypto hasn't changed at all, with the exception of the China news. And remember, the China headline wasn't even new news. China's been saying they've been anti-Bitcoin for forever. So maybe not forever, but for a while. So I don't know. I'm still bullish, and that's where I'm at. I don't know if you've changed, if you've your thoughts on crypto, but maybe this morning is, hey, buying dips, selling rips. If it works in stocks, it can work in crypto.
Yeah, I mean, I honestly think that you got to start thinking about when these altcoins are going to move again. And I think that's something I'm even taking a look at. Why not diversify in a couple of these altcoins? Look for one of them to eventually get hot with retail again. We know how retail loves those big movers.
We haven't seen a viral. Obviously, we've seen cryptos make big moves in the last couple weeks and months, but we haven't seen like a viral crypto to the extent of like a Dogecoin since Dogecoin, right? So that's a good point, Mitch.
Yeah, that's why I'm trying to take a look at it.
Yeah, waiting for the next viral crypto to. It's been a while. Maybe it is a Dogecoin. I don't know. The fact that Dogecoin is not at zero is
maybe Uni, Solana.
I thought
I've heard of those.
I thought Solana. I bought some, but that has not been the case.
That's how it is, right? You don't know. You just have to like kind of diversify, I think.
Anyway, as a reminder, the crypto updates we do are brought to you by Voyager. Get $50 in Bitcoin for free All you have to do is download the Voyager app, make your first trade, fund your account with $100, make your first trade, use the code ZING, Z-I-N-G, and you'll get $50 in Bitcoin for free.
Might have to do so myself and get some Solana.
Hey, the Bitcoin, if you get it for free today, you're buying. It's like you're buying the dip. Basically.
Right, let's do it. All right, so I want to transition a little bit more, also talking about some other plays that most people might not be looking at or even noticing. Have you seen Live Nation recently?
I know you're all over the reopening trade, so I have not seen it. No, tell me all
Look
about
at this chart.
it. LYV.
Yeah, look at that. Look at that, Spencer. Not a bad looking chart, right?
Interesting.
That's a strong candle right there on the breakout.
I wonder why.
It's interesting.
Is it like virtual? Is it like virtual?
I mean, it's weird because I would think that, then Madison Square Garden would be ripping, but
No, Madison Square Garden's got their own problems, and
they got their own problems.
It's got nothing to do with in-person events, and more to do with the collapse of the regional sports business model. But
thank you. I mean, at least you're helping me out here, Spencer, because I didn't know why.
Yeah,
that one was so up and this one was so down.
Yeah. It's MSGS, right?
Yeah,
yeah.
This is the E.
Or MSG, right. Yeah.
So there's two sides.
They've got separate problems, but yeah, Live Nation. Good call out, all-time highs. I would not have thought of this.
No. LYV ripping through the top, almost $100. Could do 100 today for you YOLO traders. It's trading at 99 right now.
Nice round number, right?
Why not? Like a dollar magnet, $100 magnet.
Or also from the short side, right? If you want to fade this rip, you short it, and your stop is 100 and a quarter, 150. I don't know.
Good level to go on.
Yeah.
You could see a 50% retracement of this bar. So we're talking about a 7% move there. So somewhere near here, 96.50, using that other level to attack, could be a move today. Restaurants is one that I want to take a look at that I didn't see rip, Spencer, but I'm going to look to see if they rip this week. So it has this is the index, nice looking kind of sideways pattern. If we start ripping, we'll look for some of these. But let's take a look at what's up, what's moving in here in restaurants. I don't know why, but they put Dave & Buster's under restaurants.
Well, they are. That's a restaurant.
Yeah, I put it under leisure, but
yeah, it's a restaurant. That's
all right. We'll keep it there.
Yeah.
Let's keep going. Let's go towards another one. BJ's restaurant setting up for a breakout through 45. We'll look at that one.
BJ.
The one that I'm looking at, Spencer, the bros to get hot again.
I never reached out to them.
I might buy it today, Spencer. I might buy it.
Hey, you've got a low. You've got a low.
Right? That's what I like.
What's
that?
Something
to go off of.
Is that from Thursday? That's from Thursday, 41.48. What's your close?
Did the retracement. I've been working on my Fibonacci's here.
Okay.
So 38.2, that percentage held pretty well, and then it's been holding between the 50 and the 38. So you want to get strong through that 50 retracement, start pushing towards 50, and that could give us our look that it wants to come back towards 55. We'll see if it gets strong today. I like 55 or 45 hold, like a little quick down move, then a breakout towards the end of the day. We'll see if that happens in bros, and we know how it's been moving. But let's take a look at some other one of these restaurants. I just want to call some out.
All right, wait, Mitch. While you do that, can I hop off? Are you able to manage
do it? I got you, bro.
Okay, I have to hop off because I'm gonna get David Green ready to go at 9:25. David will be live trading as he does every Monday, Tuesday, and a little bit Wednesday with us until 11 o'clock. So I'm gonna get David Green going today, and I'll see you guys over there. Mitch, keep it going.
We got you, bro. Like always, guys, hit the like for this guy, Spencer Israel, coming in every single morning with the news, bringing you guys through to the open. And now he's going to be bringing you with DG coming up next. Let's go ahead and finish off here. Before I continue going, can we get 500 likes? We need 75 more. You guys give us a thumbs up for going through these stocks and for me trying to give you guys my watch list, exactly what I'm looking at and how I'm trying to approach it here. All right, I want to take a look at some of the names that are being mentioned in the chat before I keep going. Looks like Palantir is being mentioned in the chat, but you guys throw some up. But before you do that, like always, hit the like. Let's keep it going. Let's see what we're seeing out there. So Ruth is one to definitely cake. Keep these on watch. I have a feeling you're going to see some of these restaurants start making moves. So Denny's, Chew, take an eye on these because they could start making a move up. We'll see what happens on these and continues making a move. All right, let's go into Palantir. Palantir here. I'm going to be wrapping up soon, guys. I'll do one more stock after Palantir. You guys smash that like, and we'll see if we get towards 500. All right, so Palantir finding support here at 2368. That's kind of the level that I'd go off of. I'd really want to see this one get right back above 25 immediately. But if it cracks 2368, you got to get out because it could be heading back down towards 2055, and I wouldn't want to be caught in that bag. Lucid is another one that has a similar situation. If it doesn't get back above the high 25 today, I could see it breaking down towards 23, and that's not what you want to see because you could get caught in a bag coming down towards 1725 again. Just be careful. Just needs to hold those levels. All right, gonna really quickly, how many we got in the chat? Let's do coin right quick. Coin, what do we see here? Nice bottoming by 230s. Needs to hold 230s. That's pretty much it for that. Starbucks just needs to hold 112, 110s on downside for it to come back towards 120s. But just be careful because if the China trade continues on the downside, Starbucks could be drawn down with it. AMD, all about holding really this probably low right here. You got to start holding tighter and tighter. 101.50s is what I want to see hold. If it goes down to 100 again, you could break down 100 and be heading down towards 90. All right, that's going to do it for me, guys. I will bring you guys over to DG. This is live trading. If you guys want to see a live trader taking trades right in front of you, where you see exactly his entries and exits, stick around right here on Benzinga's YouTube. And like always, guys, hit the subscribe. One of the things is if you're a new viewer and you just started watching this, we cover the markets every single day. And this is what we're going to do and continue doing moving forward. If anything, we're going to keep doing better and better. We're going to be opening up a new middle of the day show that's going to be combining all the aspects that we've learned in the past year to bring you guys a better show. So first things first, hit that like, hit the subscribe. And up next, you got David Green. We'll see you next time on Pre-Market Prep. Guys, check out the event on the 16th. I know I'll be there.